Hello guys, and welcome to another episode. My name is Amit, and if you've been following me and you have already subscribed, thank you very much. And if you have not, I really appreciate you tuning into my YouTube channel. And if you can subscribe, that would be wonderful. If you don't want to subscribe, that's fine too. Pretty cool. I kind of do this video out of fun anyway, so I am not trying to build it where I'm actually getting money, but that would be like 2 years from now goal. But right now the goal is to kind of add much value to you guys as possible, and in long term you guys benefit, and eventually hopefully then I'll reap in some benefit out of it. So until then, enjoy my YouTube channel, and all the content is basically on me. All right, so today's topic is gonna be Simply Safe Dividend website. This website is basically where everybody goes to kind of do a research and you build a portfolio. But one thing I thought it is very interesting that you guys might not have known that is they have this little section called idea, and within this idea I found very interesting these little things that call like high yield stocks, high growth stocks, dividend aristocrat, dividend kings, Buffett's portfolio, Gates portfolio, right? Real estate investment trust REIT, master limited partnership, dividend archiver, and monthly pairs. These are very, very interesting kind of concept in the stock market. As you know, stock market is very tricky, and if you're newbie or even somebody knows, you can quickly make your fortune or lose your fortune. So it is very important that you have right tool and you do the right research. And one of the tools that I just discovered is this, and I'm just trying to show you guys how the pro do it and how you can do it your own self, so you don't have to be kind of being part of a Ponzi scheme where you buy high and selling low. So you could be on the other end where you buy low and sell high. Okay, here let's click on some of these. This high growth stock, let's start with 4% high yield stock. Let's look at this. What in this list, which companies are here? There's Chevron, AT&T, Philip Morris, Cisco, STA Healthcare Trust of America, Duke Energy, Southern Company. These are amazing companies that you can own right now, and you would get various dividend, right? Various dividend, right? These are your dividends, and you would actually get 4% and plus, and you wouldn't lose actually much of your money. Neither will you gain a lot of money, but however, you will get a lot of these dividend money in quarterly, and you can actually grow over time. And the idea is that you buy and hold rather than you becoming a day trader. You can become a day trader, you might actually make good money, but it only takes one day to lose it all. And as you all know, the human species are notorious for wanting more and more and more, and that one day wanting more and more will actually will make us lose a lot of things. So that's why the buy and hold strategy actually works better, and dividend growth. Let's look at maybe a company that you and I maybe heard, I don't know. Let's look at Verizon. Here in America, Verizon, those of you if you don't know, Verizon is basically they provide internet service, and you can have mobile service as well. They provide cell phone plan, and you can get internet cable and TV provider. Okay, right now they're giving 4.14. Their dividend safety score is 87. Dividend growth is 2%, very slow. Price is $60. Market cap is $248 billion. Okay, let's look at something here. They do quarterly annual payout $2.81, Ex-dividend date was October 8th, and next pay is November 2nd. So right now we're in September, so next month we should actually get a lot of money. I should get a lot of money if you have dividend stocks. Okay, let's look at another company. This Paychex. Actually, Paychex is a very interesting company. My company that I work for, those of you if you don't know, I've been working in IT industry for last 8 some years. I work many companies. Right now the company that is paying me is called Paychex. Well, this is not a company that I work for. This company is actually, they handle payroll like ADP, or there are a few others, but ADP and this one, for some reason I'm drawing blank, but there are many companies that handle payroll, and this is one of the company, Paychex, that handle my payroll right now, that I'm getting. My employer pays them, they in turn pay me in a way. I think that's best way to describe it, or at least that's where I go to check my checks or update information. Okay, right now they are paying quarterly, yearly $248 and 62 cents. Look at this. Their dividend growth uninterrupted 29 years. Dividend growth streak 9 years, right? Look at this. It's just going like this. It's a very interesting idea. Let's look at some other companies here. Let's maybe look at high growth stocks. This is more like a speculation, right? MSC Industrial. Let's look at here. They're getting dividend safety of 84. Dividend is 4.65. Right? They're growing in 16 years, 16-year dividend streak growth, and $3 yield. Right? This is very important. And when they get this score, this means that this company is actually, the higher the score is, the better the company is. The reason you want a higher score company is because if you put your money in lower score companies, you're more likely to, the stock market more likely to have a lot of volatilities. Whereas you give your money to well-known companies where they in turn invested in their R&D, and hopefully they coming up newer product into the market, and with that they make more money, and everybody basically gets share of that profit. Okay, so this is another way of researching. Let's look at Brown and Brown Pool Corporation, McCormick Company. Interesting. Is it Brown and Brown? Let's look at this. Brown and Brown. This company is insurance broker. $45. Very safe company to invest in, FYI. 99 is the highest safety dividend you can get. Okay. Dividend growth is 5%. These are not the next Apple or Tesla stock, neither are the company. However, these companies are so well known that technically idea is you could retire if you're in your 20s. If you're 18, you should be able to buy them, and literally maybe once you might have to do something in a lifetime, and you can in turn go ahead and retire. Look at here, 27 years uninterrupted dividend streak. This is almost the age that I've been alive. They've been paying dividend, Right now they're paying, annual payout is 37 cents. This is not much, but still, they actually increased it. So 85, this data is wrong. Annual payout, this is wrong, because if they're paying 85, 85, 85, 85, then right, this can't add up. Well, that's wrong. Let's look at some other ideas. What is this? limited partnership, MLP, borderline of safe or better dividend safety score. You can be appealing because of their high dividend yields. Tool booth like business model, but they are carry number of unique risk. Okay, they don't have any high. Let's look at the highest is 18%, so that would be Shell midstream partner LP. 18%. They are giving you dividend of $1.84, and there's right now price is $1.90, and this is a $1 billion company, 3 billion, almost 4 billion now, couple million short. And mid cap, forward payout ratio 107%. This is a bit high, right? If they basically paying out 7%, then they bring in this. I wouldn't put my money in this kind of company. Okay, they lost money, losing. Okay, so by now you're probably getting an idea of how you can do your own research. Okay, let's go on to something else. Our portfolios, you can actually build your own portfolio, conservative retiree portfolios, right? These are the nowadays on, if you go on YouTube, that everybody's like, oh, look at my pick of a stock, look at what I'm doing, and this is how basically they're doing it. Okay, this is very dividend yield of 3.6 is very common. Target should be 3.5 to 4.5, and target dividend moderate, right? And then based off that, you can actually build your own portfolio and go ahead and retire with it, essentially, if you put in enough money. So, if you were to put in your money in these companies, essentially they give you money every quarter and you wouldn't have to work. So basically this would be somebody else is working for you while you sleep, and you can go travel the world and go follow your hobby, whatever else you like. Okay, here's top 20 stocks that you can do long-term growth. You can do, like, this is like amazing tool that I can't believe it. That I heard of it, but I didn't really use it in the past. So here is, I think, was it home? Yes, on the home, the latest research that they put out, that they give you basically about different companies. Look at Best Buy, sees growth accelerated with all store reopened, dividend safety score upgraded to safe, right? It's a good time to buy Best Buy. Look at Target dividend safety score upgraded to very safe on financial strength, store performance, right? They got 90. This is a tool, guys, so you want to be systematic as much as possible on your thought process, because if you have a systematic approach to doing any type of research, you can go ahead and tweak your system to produce the desired result you want. If you don't have something looking at systematic way, then what you have is a process that is so dynamic and so crazy you don't even understand what you need to change. You want to have something process. You have input and you have output. So let's say this could be one of the website that you go to do your initial review. Then you maybe go on Seeking Alpha, Market Watch, and a couple other websites that whatever the broker, like let's say M1 Finance or Charles Schwab, you go and actually get further research before you decide to invest in. Okay, that's kind of what I would do, because these would be your tool or your input in the process. You put that stock, and at the end what you get is output. The process basically let that process transform the stock that you want, and at the end you would have very high quality stock that you can literally, I don't know, go travel the world and without a cell phone, right? No internet access, and come back, and most likely you should still have your money where you left it, and with couple dividends, I guess, and a little bit of more growth. All right, guys. I hope you like this content, and I'm gonna try to make a little bit more. Thank you very much. Have